Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video we're going to be discussing the overall market, the S&P 500, NASDAQ, and the Russell 2000. Starting with the SPY ETF, SPY. You can clearly see as of today it had a whopping candle, massive reversal off of the lows, finishing up 1.19% on the daily session. Huge volume, trading in at over 112.97. Even if you look at the SPX on my other screen here, we can clearly see the SPX had a whopping gain itself. Massive volume, 2.442 billion, closing up above 4,300 on this chart session. So first things first, we want to look at this trend line that we've been discussing. Major pivot, major pivot. You got to close above that key trend line. That is a huge thing for the bulls. The fact that you got to close above this on the daily chart is very significant. It shows strength, likely means more upside. Can we go sideways? Can we go a little bit lower on a retrace? We can, but now this is a defined low and really a solidified candle to trade against. Look at on the weekly chart. The weekly chart put in a beautiful hammer candle. That is a thing of epic beauty. And what's going on with this candle formation? You're basically closed in and amongst the high end of the previous week sell-off. So as a trader, what do I see? Well, I see that means you're likely going to test at minimum the 43.40 level, this previous week high rejection point. And then if you get through that on a daily chart, which is this period, you're going to test this previous SPX resistance, the gap fill. Now, let me flip back to the SPY ETF. Why? It's a little bit cleaner, less lines right now. You have the daily 200 below, you have the daily 50 moving average above, creating this kind of this jaw that's closing. Which one's going to win? Well, often what can happen is you can actually have a move up to ping pong, flatten it out, stop the momentum a little bit, have a little bit of a micro pullback, momentum continues, and then price action tries to break above that. So often the price action, when you see these two moving averages conjoining like this, is you'll test the moving average, have that pullback, and then if the long-term trend prevails, which generally the daily 200 is, you should see a move higher in the short term. So that's kind of my overall expectations and thinking that what could transpire. But needless to say, another big resistance point on the chart is going to be the head and shoulders basically breakdown. Now, obviously the head and shoulders, if you do the actual measurement, it has not fully played out yet. That actual pattern has downside of about 407 on the SPY ETF. So that's a significant move. Does it mean it's going to happen? No, it doesn't, but it means that your next big resistance is also going to be this 435 level. Getting a close above the neckline is going to be imperative for the overall bulls. And needless to say, perhaps the time where it's challenging this neckline, maybe the 50 moving average is basically a little bit lower here, acting as resistance as well. So it's going to be interesting to see how the price action shapes up, but with this type of reversal and daily momentum bounce, you should see a little bit more upside in the market. And what was interesting is, even if you look on the QQQ, which I apologize if I do have some trend lines here, you did put in a lower low on the daily and weekly chart, but if you start taking out these pivots here, then it could mean that this lower low is negated and you're challenging a higher high scenario. So lots of things to consider. Notice the relative strength in the Qs filled its gap already to the upside, much closer to the daily 50 moving average and much farther from the daily 200. One thing that's why it's so important to look at technology in the Qs is because they carry the most weight, right? They are the mega cap companies. So when you look at where the relative strength is, yes, people are only saying it's the the Magnificent Seven. I mean, even if I pull up this little bit of a chart here just to show you, you had most strength in Apple, Google, Nvidia. Apple, you can't see it's cut off the screen, but up 3.18%. But needless to say, the Q's relative strength is ultimately what carries the market forward. And it's just interesting to see how things really start to shape up here in the market, where the bias turns so quickly. Look at this beautiful channel, this parallel channel you have. It's better on a weekly chart. This could ultimately be a bull flag that could break out and test to new highs. And I did kind of warn my members and start accumulating on the long side pretty heavily, you know, by buying the UWM. So that was an ultra for the IWM. You know, we were long yesterday on the IWM or UWM. Let's take a look at this. You know, we were long yesterday at 28.09, you know, so we caught that beautiful big candle in the UWM, the leverage. Obviously the Russell, I do think, is at a scenario where you could absolutely have a bounce. I mean, not only have you retraced to a downsloping trend line, which if I draw back on my chart so you can see it here, it's more of a weekly chart. Look at this beautiful trend line. Pivot to your breakout, to your retest, check back. Now you've done a full retrace. This could be a big washout in the near term for the Russell. And we were commenting on the 6 heavy volume sessions on the weekly chart. Obviously this led to a big move to the upside in the IWM. Heavy volume. And where do I think the IWM can retrace? Well, obviously there's going to be some near-term resistance point, but I think the obvious one to me looks like maybe a retest in the near term of this downsloping trend line. When you have this amount of volume traded at this key level, this big support level, obviously that's still a positive. So what's interesting with the Russell, the IWM, is identifying that we have a double bottom here where our trend kind of truly changed, significant double bottom. And then when you actually scroll through the charts, you have put in these series of higher lows. So here's your 1 higher low, 2 higher low. Now, is this going to be the 3rd higher low in the trend? It could be. It's certainly putting the overall strength of the market to the test. People that have accumulated here, people that have accumulated here, people that obviously not have accumulated here, people that haven't accumulated yet are starting to get nervous as well. So it puts the overall market structure to the test, and it really shows that people are willing to hold on to their investments. So IWM is interesting because it is showing the most relative weakness. Notice how it is way below its daily 200, way below the 50. Often when you get the death cross, the 50 going into the 2, it spawns a bounce in the market. Many people and traders are looking at this as a death cross. Yes, for the trend, is it bad? Absolutely, but it typically does mean a bounce does come to fruition in the near term. Overall, please give this video a big like down below, subscribe, and we'll definitely see you on the charts a bit later. If you're interested in some additional research as to why we started accumulating on the long side, definitely look on our